Money Talks with President Big Bucks. 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 Yeah. Money Talks with President Big Bucks.
Hello everyone. Welcome to Money Talks with President Big Bucks. Grab your cup of hot chocolate and join me for our topic today, interest rates. I know what you're thinking. Boring. Interest rates? Really? What teenager is concerned about interest rates? The only thing I am interested in is getting an iPhone. We are not having conversations with our friends on how much interest he or she is paying. We are not paying interest on anything right now. Maybe my parents are, but not me. Okay, I get it, but I can guarantee you in a few years or so, you may begin paying interest on car loans, credit cards, or student loans, and if you don't know what to look out for, you will be robbed blind. Let me share a story with you. I met a young lady named Kelly a couple of days ago. Kelly was financially distressed and depressed. I am in debt up to my eyebrow, she said. I cannot even afford to move out of my parents' house. Not to mention, I can't even afford to take a trip around the block. Kelly said, I did not work my butt off in college just to struggle each month to pay bills. Kelly graduated from Michigan State and now she owes $50,000 in student loans. She told me her monthly student loan payment was $761 per month with an interest rate of 13.5%. We can thank our For the People Congress for that lovely interest rate hike for all new borrowers after 2018. I calculated Kelly's interest rate, and in 10 years, she would have paid $41,365 in interest alone for her student loan. That's crazy. She is paying $41,000 in interest on a $50,000 loan. In total, she will pay $91,365 for her student loan. Kelly's situation gets worse. She stated she lived off her credit cards to get her through the hard times in college. Now she has accumulated $3,000 in credit card debt with a 27% interest rate. She pays $98 a month towards her credit card debt. It will take her 4 years to pay it off, making just a minimum payment. Kelly would have paid $5,141 to the credit card company. The credit card company would have made $2,141 off the $3,000 she borrowed. Lastly, she has a car payment of $457 per month with an 18% interest rate. She financed a used car because she did not qualify for a new car. Kelly's credit score was 520 due to her late credit card payments. Her car insurance is $225 per month. The car cost $18,000 and it was financed for 5 years. After 5 years, she will pay $27,425 for her car. The car finance company will make $9,425. She could have bought another car with the interest rate she is paying. Let's do a credit score comparison. If Kelly's credit score was 740, her interest rate would have been 2.5% with a payment of $318. The total cost of the car over 5 years would have been $19,072. She would have only paid $1,072 interest. See the difference between $9,425 and $1,072? Credit scores make the difference. Kelly's financial woes are enough to make anyone depressed. You think? Kelly said, I am a journalist and I make $34,000 a year, yet after taxes and health insurance, my net pay is $1,051, my monthly income is $2,102. Now, we look at Kelly's income and we think, she is making a nice monthly salary. Where is her money going? Why is she complaining? Well, let's look at her bills. Student loan, $761. Credit card payment, $98. Car payment, $457. Insurance, $225. Total, $1,541. After Kelly pays her bills, she has $561 left over a month. The most important question I asked Kelly was, how does she spend the remainder of her income? She said, on food, clothes, and stuff. I asked her, how much does she spend on each category? She didn't know. Wrong answer. Here's my advice. 1. If you don't have $30,000 saved up for college, you better be applying for scholarships beginning your sophomore year. 2. There is nothing wrong with community college. It costs 85% less and you won't be in debt. 3. If you must get a student loan and must go to the college of your dreams, don't borrow more money than you need to go to Cancun for spring break. 4. Work while you're in school to buy the things you need instead of using credit cards. 5. Budget your money wisely. You're in college. You don't need to impress anyone. Trying to impress your other broke friends will have you financially stressed 1 year after graduation when the student loan payment rolls around. 6. It does not matter what school you attended. What matters is how hard you work and your self-perseverance to succeed. Be the best no matter where you are. Here are some life rules to financial empowerment. Don't say no one ever told you. 1. The interest rates you pay on loans and credit cards is all based on your credit score. Paying your bills on time and not using over 30% of your credit card each month will increase your credit score. 2. Always pay more than the minimum payment on your credit card or loan. 3. Shop around for the best interest rates and negotiate for a lower rate if you have a great credit score. 4. Remember, the higher your credit score, the lower your payments. 5. When investing your money, look for high interest rates. The higher the interest, the more money you make. Eric Thomas said, "You will not outwork me." Ask yourself, are you outworking others or are you being outworked? I want you to thrive in the real world. You know what's even better than big bucks? Big change. Dream big, think big, do it big. Brought to you by the Big Institute. www.thebiginstitute.org. Subscribe to our YouTube channel today.